Hi everyone, Alan here. I wanted to put this in the beginning of the video just as a disclaimer to everyone watching. This is going to be a strategy video where I share my system, my P&L for the year, and also just some tools that I use that make my trading a little bit more easier and efficient. And before I was trading, I've always been in markets, but before this, I used to work at a bank. I was at JP Morgan and I was a banker on a wealth management team. I had the privilege to work alongside some very talented and educated people, and through them I was able to go ahead and just learn the macros and fundamentals and see how they really implement those things when they're navigating markets. I remember in like 2023, we were at the height of interest rates. It was cool to see how professional money managers were navigating markets, kind of just keeping all things considered that was going on. So when I started getting more active in trading, I started implementing those things and it really helped me a ton. Now I know a lot of people, when they hear macro and fundamentals and stuff, they kind of just shut off because it's a really tedious task, and the thought of using macro and fundamentals is pretty much associated with now you have to like learn this whole new thing. And although that may be true, there are some tools out there that can really help you kind of just make that tedious task a lot less painful. And so at the end of the video, I'll go ahead and share some of the tools that I use that keeps me up to date with the macros and fundamentals. So now that I got that out the way, let's go ahead and go into my office, look at the charts, and I'll go more in depth as to what I look for.
Now, I'm a swing trader and I really emphasize on keeping trading simple, and I think that simple trading is the best possible way to go about it. Now, I trade currencies, and the cool thing about currencies is that when they trend, they tend to trend for a long time. And if you look on a higher time frame basis, they're mostly all in ranges. So when you get to these higher level, these weekly or monthly support and resistance zones, you can actually play those levels pretty well and then ride that trend or ride the range. And so it's just a matter of finding a good entry and keeping up to date with the macros and the fundamentals and making sure that the trend is still valid on a fundamental basis. As far as entries, I like to keep it very simple. I use the daily time frame for entries. Now, if I'm already in the trend riding it and I'm adding to a position, then that's when I go ahead and go into the lower time frames like the 4-hour or the 1 hour to go ahead and get those entries in. But for the most part, I like to ride the trend into its entirety until we get to a monthly or weekly support or resistance zone. As far as the fundamentals go, I look for GDP, retail sales, inflation data like the CPI, PCE numbers, employment data like the unemployment numbers, non-farm payroll numbers. Now, I know that could sound like a lot of data points that you have to consider, and it is, and it's really time consuming. However, at the end of the video, I'm going to show you a tool that I use that helps me make that tedious task into something that only requires maybe 15 minutes of my day. So consider sticking around. Now, before we go into the nitty-gritty of my strategy and what I look for, I think it's really important to be transparent. So I like to share my P&L for the year. This year was a difficult market to trade, I'll be honest with you. We had Trump took office, we had the Trump trade, and then we have all these tariff uncertainties. So I did see some swings, but it's really important for me to be transparent. So let's go ahead and look at those numbers. So this is my FX book here. Now you could see that it's I guess a real account. Owanda is my broker. By the way, if you guys trade spot FX, primarily, I think Owanda is probably one of the few regulated brokers in the US that's like really reputable. They've been around since 1997. So I would really recommend Owanda. But this is it right here. So this is my gain for the year. It's at 10% around there. But this is it. My gain for the year is about 11%. My monthly is about 3.2% on average, which I think is okay given the conditions that we're in. I did see some drawdown here in January and again in March, at the end of March. So getting out of that was a little bit tough. So yeah, it's not like crazy returns by any means. I'm not making like 20% consistently every month, but it is this is what it is. Now I would like this number to be a little bit higher just because this account here, I do want to grow it a little bit more aggressively. So but for the time being, given the conditions that we're in, this is my P&L for the year. And so I plan on doing these at least every quarter, just showing you an updated P&L, just to kind of showcase the good and the bad, regardless of what the P&L number is. I do plan on showing it to you guys just to be as transparent as possible. So now let's look at the charts. This chart right here is the dollar versus the yen. And 2 weeks ago on my weekly outlook, I called out that I was going to go short this pair. I saw that the US economy was weakening and slowing, and on the flip side, I saw that the yen was showing more resilience and more growth. Specifically, the US was showing slowing growth and more uncertainties in the US economy and investments when tariffs started to come into fruition. On the flip side, the yen was actively trying to raise interest rates, and the uncertainty in the US actually gave investors a more risk-off appetite. So things like the yen and the Swiss franc really thrive in those types of environments. Now, the thing about Forex is you are basically trading two countries or two currencies, the dollar versus the yen. So we want to bet against the dollar and bet for the yen. So in this case, we're going to short dollar yen. Now, if we look at the technicals here, we see that the dollar yen chart is clearly to the downside, right? So we know that the technicals, which is the price action, is going lower, and also the fundamentals favor more depreciation to come. So I'm going to reveal my drawings here, and this is what I was looking for at the time. So we were clearly already to the downside. Now, just because we're going to the downside doesn't mean you can just hit sell and start profiting. You want to look for attractive areas to go ahead and sell the market. So what I was doing when price was right here, I wanted to see how it reacted to this zone right here. Now this zone is red because it's a resistance level, meaning price has reached this level and failed to break above it, meaning that it's now a resistance level. So what I did at the time was I went ahead and saw that we were in this upward trend line and that we hit this resistance level, and I wanted to see some follow through to the downside. So when we broke this trend line and saw follow through, I went ahead and shorted the market. Now we can see at the bottom of the screen, I'm on my Awanda account. See, Awanda MT4 live. So what I like to do is share my executions. So I sold the market here. This was a small trade. Now, for some reason, I don't know why it's showing, like I added to the trade, but it's not showing the other executions because they were pretty much over here. I was in a little bit of drawdown, but for some reason, they're not showing up. But I sold the market here. I'm on this live account, and I was in profit. Then I was in break even, saw a little bit of drawdown. And on April 2nd, when Trump went ahead and announced his reciprocal tariffs, the market actually got more fearful, and so there was more appetite for risk off assets like the yen and the Swiss franc. So that really propelled my trade. And that is the beauty of mixing technical analysis with fundamental analysis. Now, doing so can be very hard and tedious because there's so many data points and so many things to consider. So that's why I want to introduce you to the Edge Finder. The Edge Finder is a tool that I use that grabs all of the relevant data points that influence markets. So growth metrics, inflation metrics, job metrics. It gathers all of those for every single country, every asset that you can think of that you can trade. It gathers them all together and puts them in this easily digestible visual that you can go ahead and act on. So this right here is the main page, right? It's your top setups. And what it does is it gathers those metrics, like I said, GDP, the PMIs, the retail sales, inflation data like CPI, PPIs, PCE, and the labor statistics. It gathers all of them and compares. So for this one, New Zealand US dollar, it gathers all of these data points for the New Zealand economy and all of these data points for the US dollar economy, and it compares them for you and gives you a score. So if you look at this New Zealand dollar giving a +6 score, now if we look at the charts and look at the New Zealand dollar here, we can see that it's clearly in an uptrend. For the past couple days, the New Zealand dollar has been ripping higher. So if you had this tool, you could have made potentially about 400 or 500 pips. Now the tool is not a timing tool, but it does give you that fundamental bias. Same thing with something like the dollar yen that we just discussed. If we go ahead and pull up that chart, it's clearly confirming that the fundamentals are in line with this trend. So now it's your job to use your technical analysis at your discretion to find pockets in the market where you can start selling that asset. Now there's a ton of tools here. You can see institutional positioning. So this is all the big players in the market that have trades speculating in things like the Dow Jones, the yen, the NASDAQ, the US dollar, gold, Bitcoin. You can see week over week their positioning. Are they going long or short? You see that the yen saw a 5.45% net change in the positive directions, increasing their net position. So you can see that big institutional players are actively buying up the yen. And at the top, you can see their long-term positioning. You can also see market sentiment indicators like retail sentiment. For the most part, retail traders are always on the opposite end of the trade. You have heat maps that show you how the US economy is doing versus things like the euro, the UK. You can see every single metric and how it impacts the US dollar and how it impacts the stock market. You got these for pretty much every major economy: Europe, UK, Japan, Canada, Australia, New Zealand, you name it, you have it here. So for those actively trying to implement fundamentals into your trading, and you don't really have all the time in the world to be keeping up with everything that's happening in the market, because the reality is every single week there is a release of some sort for every single country, sometimes for multiple countries in the same week. And it's really hard to do and really time consuming. So if you want to delegate that task and focus more on price action and your technicals, but still using fundamentals in your system, I would highly recommend using the Edge Finder. Now at the moment, the Edge Finder is 40% off, but if you use my code ASPIRE, you get an extra 45% off of your Edge Finder. Now this is a limited time sale. They're doing their anniversary sale that happens once a year. So after this month, the price is going to increase and you'll be paying a premium for it. So thank you guys so much for watching. I hope this was helpful and it provided some value and some insight as to how I trade. If you have any questions or any specifics that you want me to kind of go more into, leave a comment. I'd be more than happy to address them for you guys. Thank you guys and have a blessed day. Bye-bye.